facing a US debt crisis. Bitcoin tumbling down 1% as US debt is downgraded by a major credit rating agency. This is major news right now. We've got US dollar index climbing here to the upside as risk dramatically rotates off. What does this mean for Bitcoin? What does this mean for risk on assets? This is a major blow here for the markets, guys. We are going to get into this and a lot more. Smash the likes. Don't forget to subscribe. Check this out, guys. US debt downgrade sinks global markets, but economists are not concerned. This is a bunch of cap, guys. I warned about this the other day. I said, guys, watch out. This dollar index is absolutely rampant right now, and there seems to be something in the ether that's causing it to climb. This is now at 3-week highs, and look how it's climbed from the bottom from 99 to now getting close to 103 here on the dollar index. Another powerful week. If I move this up to the weekly chart, look at this. 3 powerful weeks here on the dollar index, moving it to the downside. Now remember, crypto is inversely correlated to this. We need this to move to the downside, but it's showing tremendous strength. And now you can see it moving towards its weekly EMA ribbon, trying to regain it. Let's jump into what's happened here. So the Fitch rating agency has downgraded from AAA, which is like the perfect status, down to AA+. And this was always one of the risks of this rate hiking cycle we faced. Remember, Jerome Powell has just embarked on one of the fastest rate hiking cycles we've ever seen. Now that doesn't come without its risks. We've seen this before, where we've seen that the US debt rating has come to the downside. Now Fitch has put them down to an AA+, and they announced it late here, and they cited, we're expecting fiscal deterioration over the next 3 years, repeated debt limit political standoffs, and a generally growing debt burden. They're losing confidence in how the US government is being run, and therefore they've downgraded it. Now this has huge ramifications, guys. To give you an idea of the knock-on effects, there are many institutions out there that cannot hold, they're not allowed to hold funds in anything less than AAA. So they're going to have to just by default move funds out of the US dollar. Now this is causing a lot of problems here for Bitcoin and risk on assets. You've seen Bitcoin already here tumbled down 1.1%. You guys know over the last few days I've been quite bearish here from the weekend, saying, guys, I'm expecting more of a pullback. I'm looking at the EMA ribbon. I'm still the same, guys. I'm expecting a pullback here into 27.7, but this could change the mindset for a longer period than I previously thought. Let's take a look at some of the things in the statement here. So the key rating drivers: ratings downgrade, erosion of governance, rising general government debt deficits, general government debt to rise, medium-term fiscal challenges unaddressed over the next decade, higher interest rates, and the rising debt stock will increase the interest service burden, while an aging population and rising healthcare costs will raise spending on the elderly absent fiscal policy reforms. Exceptional strength support ratings. Several structural strengths underpin the United States ratings. These include its large, advanced, well-diversified, high-income economy supported by a dynamic business environment. Economy to slip into recession, tighter credit conditions, weakening business investment, and a slowdown in consumption will push the US economy into a mild recession in Q4 2023 and the first quarter of 2024, according to Fitch projections. The agency sees US annual real GDP growing to 1.2 this year from 2.1% in 2022. Fed tightening. The Feds raised interest rates by 25% in March, May, and July. Fitch expects one further hike to 5.5 to 5.75, which, by the way, the market doesn't price that in. I'll show you shortly. The resilience of the economy and labor market are complicating the Fed's goal of bringing inflation down. Remember, they're saying the economy is too strong, and that's our reason why we're worried, because you're not bringing inflation down. The economy is just not listening to you, Jerome Powell. While headline inflation fell to 3% in June, core PC inflation, which is the Fed's focus, is stubbornly high at 4.1%. So Fed is not so, Fitch, here is not too happy, right? They're like, look, you still got 4.1% entrenched inflation. So while the market's getting excited by 3%, Fitch is saying, hang on, we're not too convinced here. This is not looking good. And the question is going to be, will others also follow this same process? If we jump back into the dollar index, this is what I was sharing with you yesterday. I was okay seeing this move here on the dollar index, as long as we can reject it from its weekly EMA ribbon. But the problem now is we're going to see a flock towards safety. We're going to see a flock towards safe assets, searching for safe assets. And I don't think Bitcoin is going to be characterized as that. And for that reason, risk will continue to be off. And when risk is off, dollar index will move to the upside. So dollar index will be looking to reclaim its weekly EMA ribbon and start pushing to 103, 104 and start beating these peaks here. And if it does so, it's going to be a very difficult landscape for Bitcoin to go on any significant rallies during those periods. So that's where I'm going to be looking for those pullbacks. Now we have to caveat this. There have been some important economic commentators who have come out and called this strange, right? Mohammed El Arian says here, in a strange move, Fitch just downgraded the US sovereign from AAA to AA+ with a stable outlook. But he says here that this is quite odd. The rating agency justification set out in this statement link, I'm very puzzled by many aspects of this announcement, as well as by the timing. I suspect I won't be the only one. The vast majority of economists and market analysts looking at this are likely to be equally perplexed by the reasons cited and the timing. Lawrence Haight Summers also says this, that the United States faces serious long-run fiscal challenges. But the decision of a credit rating agency today, as the economy looks stronger than expected, to downgrade the United States is bizarre and inept. Now, we've also had Treasury Secretary Janet Yellen come out and say that this timing is outdated. In other words, she's saying, yes, we went through a difficult phase, but we're looking much better now. Jerome Powell's managing to navigate a soft landing, and we weren't expecting this now. If anything, what happened a couple of months ago when the banks were in crisis and there's regional banking issues? But it's interesting that this could still have a big knock-on effect, guys. I don't want you to underestimate the trickle-on effect that this could have. Now, some economists are downplaying it, but you can't downplay it because there are automatic, like I explained, obligations that change for many people who hold US dollars or who hold the debt. It's going to cause a rip-on effect if you've got the risk-free rate, right? The US dollar and US government bonds being downgraded to AA+. Now, this is going to create a lot of fears in the market and a flock to safety. And that's exactly what you don't want as a crypto investor, right? You want risk to be on. You want everybody looking to chase yield. Right now, people are going to be looking just to protect their money. So they're going to go into safe harbor assets. Now, not yet has Bitcoin established itself as that. I know us OGs who invest in Bitcoin, we see it as a safe harbor to flock our assets into. And of course, we have this dream that one day we will become the gold standard, better than gold is. But right now, we are still deemed a risk-on asset. And that is where my projection that we're going to be coming into this EMA ribbon continues to be where I'm sat. I more so than ever, after this news, do expect us to come into this EMA ribbon. You can already see we're sat here at 29.3. I just can't justify how we're going to bounce from here and start moving upwards. Like, what's it going to take? I mean, right now, you've got a lot of stuff going on in the markets. Of course, we had the curve issue, which we covered off. There was various other little bits and pieces. But where are we going to get the momentum to bounce here when that outlook is so to the downside? If we take a look here at the traditional markets, US markets, of course, opening up here severely to the red. NASDAQ down 1.37%, S&P down 0.85%. So to be fair, it's fairly impressive that Bitcoin's only down 1%, but I do expect more bleeding to occur as we find out more. And the other question, which is going to be on people's head, is what about the other rating agencies? Are they thinking the same thing, or are they going to come out and say, no, Fitch are losing their minds, that's not right, that's outdated, we're not going to be following suit? Because if some of the other rating agencies like Standard & Poor's start following suit, we could be in a bit of a US debt crisis, and this could just be the start of that unfolding. Remember, we are not out of the woods until Jerome Powell starts loosening monetary policy. Could this be the indicator that he may have to loosen quicker than before, right? And you can take here and see that the markets aren't really changing too much here. 83% of the market expect to pause at this next meeting on September the 20th. And this is what, as investors, we're all looking forward to, right? We're looking forward to the US government doing what they always do when they're in a bit of a pickle, which is head to the money printer, print, increase the money supply in the markets, and of course, we know what happens thereafter. Bitcoin has its next bull run. Hopefully you guys enjoyed this update. As always, if you appreciate this type of content with timely news updates, smash all the likes. Don't forget to subscribe. You enjoyed this video here breaking down my crypto profit taking strategies, and I'll see you in the next one.